penny stock which is listed in Nasdaq. Let's deep dive into Ambev as one of the Latin America's largest beverage companies, best known for producing and distributing some of the region's most iconic beer and non-alcoholic beverages. In this analysis, we will explore Ambev's business fundamentals, its ownership and shareholding structure, and long-term growth prospects as a stock. So let's begin, guys. So, Ambev S.A. formerly Compañía de Bebidas das Americas is a major brewing and beverage company headquartered in Sao Paulo, Brazil. It operates across Latin America and Canada, producing a wide portfolio of beer like Brahma, Skol, and Antarctica, Budweiser, and Corona, as well as soft drink, bottled water, and other non-alcoholic beverages. Ambev holds leading market share in several countries, for example, over 60% in Brazil and above 90% in smaller South American markets, giving it a strong regional footprint. Let's break down the core financial fundamental. Recent data shows Ambev generates high revenue and solid profitability, with revenue in the tens of billions and net income in the multi-billion range. It typically maintains strong margins, with net margins near double digits, reflecting efficient operations in a country. Key ratios paint a picture of financial strength. A price to earning ratio in the mid teens, suggesting reasonable current valuation relative to earnings. Return on equity and assets are healthy, showing management's ability to generate returns for shareholders. Very low debt levels compared with equity, indicating conservative very low debt level compared with equity, indicating conservative level. Ambev has a reputation for returning cash to shareholders in recent years. Dividend and share buybacks have been meaningful, reflecting confidence in cash flow and long-term value creation. However, it's not without near-term challenges. Some analysts view parts of its valuation as a slight stretch, citing modest revenue growth and macro pressure in key markets. Overall fundamental shows a profitable, financially stable business, characteristics of large consumer staples companies. So understanding ownership reveal how much influence different shareholders have. At the top is Anheuser-Busch InBev, the global brewing giant, which holds about 62% of Ambev shares. This dominant position ensures strategic alignment and financial backing, but also means minority shareholders have limited influence over corporate decisions. A significant local investors, Fundacio Antonio E. Helena Zerner, holds approximately 10%, reflecting institutional interest from Brazilian capital. Other institutional holders include global assets management such as Vanguard, Invesco, Renaissance Technologies, and GQZ Partners, although their individual stakes are relatively small. This shareholder mix, with a controlling strategic holders and a diverse set of institutional investors, suggest a balance between long-term strategic guidance and broad market participations. Ambev's market position is one of its greatest strengths. It has dominant market shares in Brazil and several Latin America countries. It operates as one of the largest independent Pepsi bottlers in Latin America, diversifying revenue beyond beer. Its scale delivers distribution efficiency and bargaining power with supply critical advantages in a competitive web. Dominant presence creates a wide economic moat helping this dominant presence creates a wide economic moat helping protect earnings against competitors. This dominant presence creates a wide economic moat helping protect earnings against competitors and slower macro environments. Looking ahead, several factors support long-term growth. Ambev has been shifting towards a higher margin premium products which capture more value per unit sold and appeal to changing consumer tastes. Premium beers now represent a larger share of their product mix, enhancing profitability. Latin America's growing middle class and rising disposable income support increased consumption, especially in countries where beer and beverages penetration remains below global averages. Ambev is investing in automation and supply chain optimization, improving margins and reducing costs over time. These these productivity gains help offset inflationary pressure in raw materials and logistics. So, share buyback and consistent dividends are key parts of Ambev's approach to reward shareholders and potentially support future stock price appreciation. However, investors should be mindful of risks like currency volatility, economic cycles in Latin America, and competition from other beverages companies and craft brewers. Market analysts have varied view on Ambev valuation. Some models suggest that the stock undervalued relative to its fundamentals with upside potential if earnings and growth continue. Others point to short-term pressures such as slowing industry volume or cautious sentiment leading to neutral or hold recommendations from brokers. Ambev's valuation ratios like PE and price to book often trade at discounts to international peers, reflecting emerging market risk but also potential for long-term gains if macro conditions improve. In essence, the market sees Ambev as a stable, dividend-oriented company with moderate growth prospects, appealing to long-term investors seeking income and steady returns. To conclude, Ambev SA represents a blend of strong market positioning, solid fundamentals, shareholder friendly policies and long-term growth potential. While not without risk, its scale, profitability and dividend framework make it an engaging option for investors focused on stable long-term equity ownership within the consumer staple space. Thank you for listening, and remember that all investment decisions should involve careful research and alignment with your financial goals.